Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll discuss now one question where we are required to calculate revenue statement ratios, but we are not required to prepare vertical income statement. When it is clearly given in the question that we are required to prepare vertical income statement, then only we are required to draw vertical income statement. Otherwise, we are required to use information and calculate various ratios which are asked in the question. Let us read question. The following is the summarized profit and loss account of Messrs. Hanuman Products Limited for the year ending 31st March 2014. Opening stock, it will be part of cost of goods sold. COGS. Purchases, COGS. Wages, part of cost of goods sold, COGS. Freight and octroi on purchases, part of cost of goods sold. Direct expenses, cost of goods sold. Office insurance, administration expenses. Office staff salary, administration expenses. General manager's salary, administration expenses. Staff welfare expenses, administration expenses. Printing and stationery, administration expenses. Interest, finance expense. Audit fees, administration expense. Office rent, administration expense. Computer repairs, administration expense. Advertising, selling expense. Bad debts, selling expense. Traveling, selling expense. Commission, selling expense. Depreciation on furniture, administration expense. Depreciation on building, administration expense. Depreciation on vehicles, selling expense. Interim dividend paid, this is appropriation of profit. Loss on sale of asset, 1 lakh. Non-operating loss. Income tax, this will be deducted from net profit before tax. Sales, this will be first item of income statement. Profit on sale of asset, this is non-operating income. Interest received, this is also non-operating income. Dividend received, non-operating income. Closing stock, while calculating cost of goods sold, closing stock will be deducted. Calculate the following ratios: gross profit ratio, operating ratio, office expense ratio. Vertical statement of accounts not expected clearly given. First ratio we have gross profit ratio. For gross profit ratio, we need a formula. Gross profit divided by net sales multiplied by 100. In question, we cannot get directly the figure of gross profit. We are required to calculate cost of goods sold. Sales minus cost of goods sold will get the amount of gross profit. So cost of goods sold we got 24 lakh 30,000. Sales we have, from sales we'll deduct this figure of cost of goods sold to arrive at the amount of gross profit. Sales we have 50 lakhs. Sales 50 lakhs, cost of goods sold 24 lakh 30,000. Gross profit 25 lakh 70,000. Now we can find out gross profit ratio. Gross profit 25 lakh 70,000. Net sales 50 lakhs multiplied by 100. So we got gross profit ratio 51.4%. Next we have operating ratio. Formula for operating ratio is cost of goods sold plus operating expenses divided by net sales multiplied by 100. Let us calculate operating expenses. In operating expenses, we have administration expenses, office insurance, office staff salary, general manager's salary, staff welfare expenses, printing and stationery. Interest will not be considered as part of operating expenses. Audit fees, office rent, computer repairs, advertising, bad debts, traveling, commission, depreciation on furniture, depreciation on building, depreciation on vehicle. These will be considered as operating expenses. Total operating expenses are 11 lakh 5,000. While calculating gross profit ratio, we have done working note to calculate cost of goods sold. Cost of goods sold we got 24 lakh 30,000. We need now cost of goods sold, which we have 24 lakh 30,000, plus operating expenses we got now 11 lakh 5,000. divided by sales 50 lakhs. Cost of goods sold 24 lakh 30,000 plus operating expenses 11 lakh 5,000 divided by net sales 50 lakhs multiplied by 100. We got operating ratio 70.7%. Next we have office expense ratio. Office expense ratio formula is office and administration expenses divided by net sales multiplied by 100. Let us calculate first office and administration expenses. We are required to consider here office insurance, office staff salary, general manager's salary, staff welfare expenses, printing and stationery, audit fees, office rent, computer repairs, depreciation on furniture, depreciation on building. Here office vehicles depreciation we have taken 20,000. If we assume those are sales van or sales vehicle, then it will be alternatively treated as selling expenses. So total office and administration expenses we got 7,55,000 divided by net sales multiplied by 100. So we got here ratio 15.1% office expense ratio. In this question, we have learned how to calculate the various ratios by selecting the information from income statement at university level questions. How it is to be presented, that also we have understood from this question. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.